Hey guys, what's up? Welcome back to another video. In this video, I'm going to be looking into the recent third quarter 2022 earnings results that came out for Alphabet, aka Google, the parent company of Google. And we can see that over the last year, Alphabet is down about 33% in the same year that the S&P 500 is down 14%. So they are definitely underperforming the market at the moment. And over the last 5 years, they are beating the market. They're up 90% in the same time period that the overall market is up about 50%. And so in this video, I'm just going to look into their financial statements to see what their earnings results came out to be for the third quarter of 2022. And then I'm going to end the video off by using a discounted cash flow model to figure out the intrinsic value per share for Google, so we can know if this is a good buying price to buy into the company from a value investing perspective. And so right here, before we get into the financial statements, I found a little article here that pointed out something pretty interesting, which is that the number 3 cloud provider, which is Google, actually matched their cloud revenue growth with the number 1 cloud provider in Microsoft. And obviously, Microsoft has a huge cloud business. It completely eclipses Google's cloud business, and yet their cloud revenues increased at the exact same rate. So we can see right here that the Google Cloud added as much new cloud revenue in Q3 as the market leader Microsoft at around $600 million for both companies. And then they actually pointed out here to keep in mind that Microsoft's cloud business is about 4 times larger than Google's cloud business, and yet both of the companies reported an identical increase in monetary dollar amount growth revenue for their cloud revenue. And so we can see right here, in quarter 2, Google's cloud revenue was about $6.2 billion, and in quarter 3, it was about $6.8 billion. So that's an increase of close to about $600 million in new cloud revenue. And then for the Microsoft Cloud, their Q4 fiscal year revenue for the same period as Google came out to be about $25.1 billion, and in the next quarter after that, it was $25.7 billion. So that's also an increase of $600 million, even though their revenues come out to be about $25 billion, and Google's is only about $6 billion. And so obviously, that's pretty monumental because, as they point out right here, the growth for the cloud revenues for Google came out to be about 37.5%, while for Microsoft, it was 24%. Which means that Google's cloud revenue grew 50% faster than Microsoft's cloud business in Q3. So pretty interesting to see how Google's cloud business is accelerating in growth a lot faster than Microsoft's, or at least it was for this last reported quarter. And so we can see right here for their financial statements for Q3 2022, they're comparing their year-over-year results from the balance sheet for December 31st, 2021 to the balance sheet for September 30th, 2022. They actually report them from left to right instead of from right to left like most companies. So that might be a little confusing, but that's how it looks for them. And so their total assets year over year actually decreased from about $359 billion to $358 billion. And we can see that compared to their total liabilities, their total stockholders' equity is larger at about $251 billion, increased to $253 billion, compared to the decrease in the total liabilities for Google at about $107 billion to $104 billion. And so that increase for total stockholders' equity came primarily as a result of an increase in their earned capital from retained earnings. So they're not diluting shareholders by raising capital from outside investors, which is always a good sign. And so we can see right here that for their income statement for the third quarter of 2022 compared to 2021, they experienced an increase in their revenues of about $65 billion to $69 billion. And yet their net income actually decreased from $18.9 billion to $13.9 billion. And that came mainly as a result of the sharper increases in their operating expenses here, their cost of revenues, and particularly here their research and development, which increased the most percentage-wise. And so that's what resulted in the decrease in their bottom line net income. And so if I go to page 10 here, we can see their cash flow statement. They're comparing the 9 months ended September 30th, 2021 to 2022, and we can see that the net cash provided by operating activities was about $66 million compared to $67 million in the recent quarter. So it did increase by about $1 billion. Or if I said million, that's my mistake. I meant $66 billion to $67 billion. I think I might have said million, but I don't remember. And so right here for the financing activities, they experienced repurchase of common stock of about $43.8 billion for the first 3 months of 2022. So they are returning a ton of value back to shareholders in the way of common stock repurchases. And the last thing I wanted to break down here was their disaggregated revenues. They're reporting their revenues by operating segment, which I thought would be pretty interesting to look at, especially considering the fact that we're all on YouTube right now watching this. So curious to see how much money they're actually making from their YouTube ad revenue. And we can see right here that the majority of their revenue comes from the ad placements on their Google search websites. So that increased from about 37.9 billion to 39.5 billion year over year, but their YouTube ad revenue actually decreased year over year from 7.2 billion to $7 billion. And then for their Google network, that revenue decreased from about 7.9 billion to 7.8 billion dollars. So in total for their Google advertising operating segment, it increased from about 53 billion to about 54 billion dollars, mainly due to the increase in Google search as opposed to YouTube ads, but maybe that'll turn around in the future operating quarters. And so we can see right here that their Google Cloud revenue increased the most out of all of their operating segments from what it looks like by about 4.9 billion to 6.8 billion dollars, and that's the line item, their cloud revenues, that increased faster than Microsoft's cloud revenue growth. So definitely interesting to see how that's ranking up against the rest of the competition, and definitely be interested to see where that goes from here. And so now we can see this discounted cash flow model that I put together for Alphabet's company, basically trying to figure out what the intrinsic value per share for their company is. And Yahoo Finance is estimating that Google is going to grow at a rate of about 8.9% compounded annually for the next 5 years. They have about $67 billion worth of reported free cash flow for 2021. And they currently have about $86 billion worth of cash sitting on their balance sheet when it's netted against their debt position. And then they have about 6 billion shares outstanding. So with these metrics in mind, it looks like their intrinsic value per share comes out to be about $176 per share, with a 50% margin of safety of $88 per share, which compared to their current share price means that Alphabet is actually trading almost near their 50% margin of safety, since they're currently trading at $96 per share. And at their all-time highs around November 2021, they were trading at near $150 per share. So at that point, they were still trading below their intrinsic value per share, but now they're trading even less so, near a 50% margin of safety, which is pretty rare to see a company of this size, like the size of Google, that's trading below their intrinsic value per share at such a steep discount if we're taking into consideration the amount of free cash flow that's coming out of their business. And so I also wanted to do a competitor analysis to see where they rank up against the other big tech businesses in this industry. I compared them against Microsoft, Apple, Amazon, and Meta platforms, previously known as Facebook. And we can see that their gross profit margin is middle of the pack, higher than Apple and Amazon, but lower than Microsoft and Meta, which is beating out the competition with their 80% gross profit margin. And then in terms of net profit margin, they're also middle of the pack. They're higher than Apple and Amazon again, but lower than Microsoft's leading net profit margin and Meta's second place 33% net profit margin. And then in terms of return on assets, they once again are middle of the pack. Apple has the highest, Meta has the second highest, and then Google has the third highest. So in terms of a competitor analysis for their financial ratios, it looks like Google is doing decent. They aren't blowing out the competition in terms of business efficiency, but they are remaining extremely competitive. And one thing to point out, obviously, is that not all of these companies, these big tech companies, are trading below intrinsic value per share, but Google is. If we look at their intrinsic value per share estimate here, this analysis, we can see if they're able to maintain about an 8.95% growth rate for the next 5 years, and then for the next 5 years after that, about 4% based on the projected free cash flows for their business, based on the historical free cash flows from their business, looks like the intrinsic value per share is definitely a lot higher than their current trading price, which is pretty rare, but definitely interesting to see how Alphabet might potentially be presenting a strong buying opportunity right now. And so I'm not too sure what to think about Alphabet. I might buy a couple of shares right now just to see where it goes from here, or I might wait for it to get a little bit lower than this. Obviously, there was a pretty sharp decline in their share price right here from about $105 per share to $95 per share when they announced earnings. So there might be maybe a potentially even cheaper opportunity to buy into the company a little bit later down the line. But I would love to know what everyone watching this video thinks about Alphabet. Is it a good buying opportunity right now? Let me know in the comment section down below. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.